Good morning. Thank you for joining today's daily webinar. Today's topic is my solo 401k financial beats robo-advisor solo 401k. Have your cake and eat it too. As always, we're going to go over your live questions on the air. We use this session to not only cover certain topics, but we also answer questions live on the air, whether it's about today's topic or any other related information regarding solo 401k plans, traditional 401k plans, as well as self-directed IRAs. So don't hesitate to shoot over those questions during the live webinar, and we'll make sure to pause during the webinar and answer your questions as they come in. So if you're thinking about opening a solo 401k or already have one through a robo-advisor like Wealthfront or Betterment, you might be missing out on some huge opportunities. Give me a moment here. I'm going to check our volume here. Okay, looks like our volume is working. Today's webinar is all about a bold question. Can my solo 401k financial beat our robo-advisor solo 401k? Well, spoiler alert, in a lot of cases, yes, it can. And we'll show you how. But first, make sure to subscribe to our channel and like this video to help more solo business owners get the facts they need to grow their retirement the smart way. So here's what we're going to cover today. Key limitations of robo-advisors with respect to offering a solo 401k plan. Features that matter, such as the mega backdoor Roth solo 401k strategy, solo 401k participant loans, being able to not only invest in equities such as index funds, stocks, but also alternative investments like real estate rental properties, promissory notes, tax liens, precious metals, cryptocurrency, private equity, and the list goes on. And how to take full control of your retirement strategy. Again, go ahead and shoot over any questions you have during the live webinar. It doesn't have to be about today's topic. It can be about any topic surrounding solo 401k plans, traditional 401ks, and self-directed IRAs, and we'll answer those questions as they come through. Just type them on over. So, what's missing from a solo 401k offer by a robo-advisor? Well, one, their solo 401k plan does not allow for what's referred to as voluntary after-tax solo 401k contributions as part of the mega backdoor Roth solo 401k strategy. And that's a very popular and very important strategy for those who are trying to supercharge their retirement account savings tax free. Because when you make a voluntary after tax solo 401k contribution, those funds can be converted over to the Roth solo 401k or the Roth IRA. And for tax year 2025, for example, you can contribute as much as $70,000 as a voluntary after-tax solo 401k contribution, and then convert it to the Roth solo 401k or the Roth IRA. And all those funds are going to grow tax-free. So that's one important item that's missing from robo-advisors solo 401k. In many instances, you cannot process and plan Roth conversions either through a solo 401k offered by a robo-advisor like Betterment or Wealthfront. However, later on, we're going to talk about how you can have your cake and eat it too with respect to opening a self-directed solo 401k from my solo 401k financial and being able to utilize all these strategies that are missing from a solo 401k offered by a robo-advisor, whereby you're going to be able to also open up a brokerage account at a wealth advisor like Wealthfront for a solo 401k offered by my solo 401k financial, so that you can not only utilize that robo-advisor's exchange traded fund strategies, but you're also going to be able to continue to invest in alternative investments like real estate, precious metals, cryptocurrency, private equity, and also be able to utilize the solo 401k participant loan, the mega backdoor strategy, and so forth, because the self-directed solo 401k will be offered by my solo 401k financial, but we'll talk more about that a little bit later. So other limitations of most robo-advisor solo 401k plans is that they don't allow for solo 401k participant loans. A solo 401k participant loan can be very crucial, especially if the individual is looking to use funds to purchase their first rental property or their first primary residence, or they want to pay off high interest credit card bills. With the solo 401k from my solo 401k financial, you can borrow 50% of the total solo 401k balance, not to exceed $50,000, and use those funds for any purpose. That's known as a solo 401k participant loan, which is generally missing from a solo 401k offered by a robo-advisor, but a self-directed solo 401k from a solo 401k provider such as my solo 401k financial does allow for it. Okay, it looks like we've got some questions here. Let's pause and go over those questions, and then we'll come back and continue with today's presentation, which is my solo 401k financial beats robo-advisor solo 401k. Have your cake and eat it too. Okay, so we got a question here from Phil. Once the solo 401k is established, investing in real estate, does the LLC file tax schedule E? Well, so if you're talking about investing a solo 401k in a checkbook solo 401k LLC where the solo 401k is the sole member of an LLC, then no, a Schedule E does not apply to that type of LLC because it's a disregarded entity. Why? Because the only member of that LLC is a solo 401k plan. Therefore, it's not going to subject that LLC that's funded with the solo 401k to a Form 1065 partnership return, because there's only one member, that's the solo 401k, nor does the Schedule E apply. Okay, good question. Looks like we have another question here. Where's the Schedule E reported for the solo 401k? So Schedule E never applies to a solo 401k plan, because a solo 401k plan is a tax shelter vehicle. So reporting that applies to a solo 401k really depends on, number one, whether you take a distribution from the solo 401k, such as a required minimum distribution. Second, you process a conversion. Let's say you make a pre-tax solo 401k contribution or a voluntary after-tax solo 401k contribution, and then convert those funds to the Roth solo 401k. That's going to trigger the issuance of a Form 1099-R. Another instance of reporting is once the market value of that solo 401k plan is greater than $250,000. That's going to result in having to file a Form 5500 Easy, which is technically not a tax return, it's actually an informational return. Also, that informational return, that is the Form 5500 Easy, is also triggered when a solo 401k plan is terminated regardless of market value. So even if the market value of that solo 401k plan is less than $250,000, it is going to apply if you close the solo 401k, because when you close the solo 401k, you have to formally close it with the IRS, and that's done by issuing a Form 1099-R to report the full non-taxable transfer or distribution, as well as the Form 5500 Easy to report the closure of the plan. All right, let's see here. See if we have any other questions here. So, got a question here. For quarterly scheduled payments for a solo 401k loan, if the due date for the payment was March 1st of 2025, when is the grace period end date before which the payment need to be deposited? Good question. So again, when you borrow from a solo 401k plan, that's known as a solo 401k participant loan, you can borrow 50% of the balance, not to exceed 50,000. For instance, if the value of your solo 401k is $100,000, the maximum you can borrow is $50,000. Even if the value of that plan is over 100,000, you can only borrow 50,000. That's the maximum. Another example, let's say the value of your solo 401k plan is $40,000. The maximum you can borrow would be $20,000. With respect to your question, yes, there's a grace period that applies separately to each solo 401k participant loan payment. When you borrow from the plan, it's typically for a 5-year period, or if you use the proceeds towards the purchase of a primary residence, it can be extended to a 15 or 30-year loan period. The payments are made up of principal and interest. They're fixed payments for the life of the loan. The principal and interest flows back to your plan. If you missed a payment that was due, let's say you're on a monthly payment period, and your payment was due March 1st of 2025. If you missed that payment, then under the solo 401k participant loan payment grace period, you have until the end of the following quarter to make that payment up. And we're talking about traditional 3-month quarters. So obviously, if you had a payment due March 1st, that's the first quarter. So the first quarter would be made up of January, February, March. You missed that payment, that's going to have to be made up by the end of the second quarter. So the second quarter would start April 1st. So April, May, June. So you would need to make that payment up. Excuse me, not March. It would be April. Yeah, April, May, and June. So you would need to make that payment up by the end of June 30th of 2025, so that that loan does not go into default. So that's important to understand, is that grace period. So again, quarters are traditional quarters, 3-month quarters. We got January, February, March, that would be quarter 1. We've got April, May, June, that's quarter 2. We got July, August, September, that's the third quarter. Then we've got October, November, December, that's the end of the fourth quarter, being December 31st. Let me send over a link from our website that talks about the grace period, so you can take a look at that more closely. Give me a moment here. Okay, let me share this with you. I just went ahead and sent that over. Okay, we're going to pause here, and then we'll come back and answer some more questions here in a moment. Let's pick back up regarding how my solo 401k financial beats robo-advisors solo 401k, and we're also going to talk about how you can have your cake and eat it too. So we've already talked about how robo-advisor solo 401k generally does not allow for voluntary after-tax solo 401k contributions. Therefore, no mega backdoor Roth solo 401k strategy. Typically, no in-plan Roth conversions, whether it's pre-tax or voluntary after-tax funds. No solo 401k participant loans. No alternative investments. We talked about that as well, such as rental properties. That's real estate rental properties, precious metals, private placements, promissory notes, and so forth. And they generally don't offer full compliance support. Whereas a solo 401k from my solo 401k financial supports the mega backdoor Roth solo 401k strategy. As a matter of fact, we were probably the first solo 401k provider in the industry to offer the mega backdoor Roth solo 401k. We've been doing so since 2014. And it's so popular now that we process thousands of these every year. And we take care of the reporting for that mega backdoor Roth solo 401k. So it's not only necessary for the plan to allow for it if you want to utilize it, but reporting has to occur as well in order to get credit for it. Specifically, that's Form 1099-R reporting. So even though when you convert that mega backdoor Roth solo 401k strategy, it's not a taxable event, it is a reportable event. We talked about how a solo 401k from my solo 401k financial allows for solo 401k participant loans, checkbook control as well, where you can use the plan to invest in alternative investments by writing a check or by wire. And we also provide comprehensive solo 401k compliance support for clients who timely requested at no additional charge. That's Form 1099-R and Form 5500 Easy. So those are things to understand. Now, other cons of a solo 401k offered by a robo-advisor is, as I've already touched on, limited customization. They also charge management fees, typically 0.25% on the underlying exchange traded funds. With the solo 401k from my solo 401k financial, because it's self-directed, you're going to be able to open up brokerage accounts at Fidelity or Schwab, and you're going to be able to invest in exchange traded funds as well as equities. And there won't be any type of asset management fee. So no management fees because it's a self-directed solo 401k offered by my solo 401k financial. And both Fidelity and Schwab will provide brokerage accounts for a solo 401k offered by my solo 401k financial, even though they offer their own solo 401k. And because the solo 401k is offered by my solo 401k financial, all those features I talked about earlier are going to apply, such as the mega backdoor Roth solo 401k strategy, solo 401k participant loan, invested in alternative investments. Another big one is that the robo-advisor solo 401k typically does not offer the auto contribution credit. And you don't have to make contributions to qualify for the auto contribution credit. And the auto contribution credit is offered by the government to subsidize the cost of having a solo 401k plan. The way it works is that you have to open a solo 401k from a self-directed solo 401k provider, such as my solo 401k financial, whose plan has the required language for that auto contribution credit. That's number one. Number two, the way it works is that one, you don't have to make contributions to qualify for it, and you can contribute in whatever amount you want or not contribute at all. You can contribute up to the overall limit, of course. Second, it's a $500 credit for 3 consecutive years. So if you open a solo 401k plan, well, we will automatically draft those plan documents to allow for that auto contribution credit. So if you open a solo 401k here in 2025, for example, you're going to get a $500 dollar for dollar credit where you're going to file Form 8881. You attach that to your business tax return to get that $500 credit. Then you can do a second $500 amount in 2026, where you'll file another Form 8881. And then a third one for 2027 and for $500. And you would also file Form 8881. So for those 3 consecutive years, you get a $500 auto contribution credit for each year for a total of $1,500. And that more than covers the cost of having a solo 401k from my solo 401k financial for many years. So that's another big one. Now, as I touched on earlier, a lot of the robo-advisor solo 401k may not handle complex solo 401k compliance needs, like understanding how the rules work when invested in alternative investments, the contribution regulations, especially if you're making employer Roth solo 401k contributions. Yes, you heard that right. Secure Act 2.0 now allows for making not only employee Roth solo 401k contributions, but also employer Roth solo 401k contributions. Also, they may not be able to handle compliance distribution regulations, such as distributions due to divorce under a quadro. Also, distributions due to decedent claims, beneficiary claims, also regarding 401k participant loan regulations and specialized IRS reporting and so forth. So let's pause here and take a look at some more questions, and then we'll come back and continue talking about today's topic, which is how my solo 401k financial beats robo-advisors. Solo 401k. We're also going to talk about how you can actually continue to use my solo 401k for a self-directed solo 401k and also have a separate trust account under the solo 401k at a robo-advisor like Wealthfront. So that's how you're going to be able to have your cake and eat it too. Okay, let's see here. What other questions we have coming on the pipeline here? So got a question here. Where to report rollovers coming into a solo 401k to your firm? Well, number one, those don't get reported to our firm. Those instead get reported to the IRS. And that's going to be done by the institution where the funds are transferred from. So let's say you do a direct rollover from an IRA to the solo 401k plan. That IRA institution is going to issue a 1099-R to the IRS to report that rollover conversion. If it's a direct rollover where the check is made payable directly to the solo 401k plan from the IRA, you then deposit that check directly into the solo 401k holding account, like the bank account or brokerage account. If it's a 60-day rollover, a 1099-R will still be issued by that IRA company to the IRS. You're also going to need to report that on your Form 1040 tax return. So again, that's not reported to my solo 401k financial. That's reported to the IRS by the IRA institution that issued the 1099-R, and then you report it to the IRS on your tax return by attaching that Form 1099-R to your personal Form 1040. Good question. Okay. So it looks like we've are caught up on questions for now. If we'll continue with our today's topic. If you have any questions, again, it doesn't have to be about this topic specifically. Go ahead and type them over. We'll pause and answer those as they come in. So we're talking about how my solo 401k financial beats robo-advisors solo 401k and how you can have your cake and eat it too. So individuals that should be watching this type of webinar for today's topic are freelancers, solopreneurs, real estate investors, consultants, doctors, high income earners, especially if you want to do the mega backdoor Roth solo 401k strategy. That's very popular among high income earners and anyone seeking tax free growth and full plan control. So again, go ahead and shoot over any questions you have, and for now, we'll keep on covering today's topic. So the way you can have your cake and eat it too, that is, have a self-directed solo 401k from my solo 401k financial, and also utilize the robo-advisor services, is by one, opening up a self-directed solo 401k fund for my solo 401k financial. We would then help you open up bank or brokerage accounts for that solo 401k. If you want to invest in alternative investments like real estate, uh, private equity, cryptocurrency, precious metals, then a self-directed solo 401k is ideal. And then subsequently, we can help you open up a trust account over at Wealthfront, who's a robo-advisor, so that you can invest in their robo-advisor funds. And it's still considered one solo 401k plan. That is a self-directed solo 401k for my solo 401k financial. But you can have multiple holding accounts. So you can have bank, brokerage accounts, or both for that solo 401k. And then you can also have a trust holding account in the name of the solo 401k plan from my solo 401k financial over at Wealthfront. So that's how you can have your cake and eat it too. And we have helped a lot of clients utilize Wealthfront for their robo-advisor funds. All right. So again, if you want to utilize a self-directed solo 401k from my solo 401k financial, the advantages are maximum flexibility, the mega backdoor Roth solo 401k strategy, the $1,500 auto contribution credit, where you're not required to contribute in order to claim that credit, which is a way of subsidizing the cost of having a solo 401k for many years. The ability to invest not only in alternative investments, but also equities like stocks, exchange traded funds with no underlying management fees. Also being able to process solo 401k participant loans, and of course, checkbook control, wire control, and full compliance support. So it's one-stop shop in short. All right. It looks like we've come to the end of today's session. We really appreciate you joining today's daily webinar and asking your questions. We're live typically every day, at least once a day, sometimes a couple times a day, where we answer questions live on the air. As always, please subscribe to our YouTube channel, like this video to help get the word out to other solopreneurs like yourself. Until next time, have a great rest of the day.